Hello all and welcome to the pre-market report by Invesfinc. As usual, in today's video, we will share the outlook on Nifty, Sensex, Banknifty and FINNIFTY for 28 May 2025. In addition to this, we will also be sharing the trending stocks from today's trade. So stick with us until the end of the video. Before we jump onto the details, please go through this disclaimer. Now let's begin with the analysis on Nifty. So we are in the Nifty 50 daily chart. So today was a roller coaster day for Indian indices, despite the Asian markets, including Europe and the US markets, headed positive. If you look at the intraday chart, maybe 5-minute or 15 minutes chart, you will be able to know how the overall day was. So it was quite volatile. So once the markets opened at 9:15, so we saw a sharp fall coming in, and then somewhere around at 11 o'clock to 11:30 we further rallied and moved beyond the uh, day's high, and then it closed at the higher levels around 11:30, and from there sharp again we started falling, and this fall continued until 2:30, and in fact we started trading lows of around 24,700 odd levels in the afternoon, close to 2:30 p.m. around. And then from there gradually we recovered almost 125 points and then closed at 24,826 odd levels. Now all this volatility could be because of two reasons. One, today being the expiry for Sensex, and second, because the VIX had shot up around 5% and approached towards the levels of 19. So this could be the reasons which attributed for today's sharp volatility, both on the top as well as on the lows. Now let's analyze what can we see for the next day's trade. So as you could see, we in fact had been approaching towards the highs. So now we had almost touched the high here once, and then second, and today in fact we started from the day high, and there was a significant downfall that come in, and as you could see from the lower levels we had risen towards the high, and then further we fell down and closed at this level of 24,826. So overall, now on the long side, if you see, because of this just one single trade, it seems to be a cancelled approach on the further up leg move. So for us, the immediate support would be around at 24,600 odd levels primarily. If we see tomorrow the Nifty starts trading below 24,700 odd levels, then this would lead to continuation of the downfall. In case if you see the market opens in between of this range, the entire today's range, the low of 24,700 and the high of 25,062 odd levels. So if we open somewhere here and trade in this range, then and do not cross either on the high side or on the low side, then this trade might continue even for Thursday. So again, since Thursday being the expiry for Nifty and also the monthly expiry for various other indices like Banknifty and FINNIFTY, we are anticipated to see some volatility. So don't just judge or go by today's downfall or volatile session. We might see a quick reversal coming in like tomorrow, or maybe if not, tomorrow could be a retracement of assuming that 50% retracement had come. Okay, and then from there on we could see a further up move, or in fact a short up on the Thursday session expiry day. So these all possibilities are definitely there. So we have to trade cautious and carry limited positions for Thursday, because how the volatility was today, the volatility could be there but on the long side on Thursday. Similar thing could happen if we do not even retrace by 50% and trade just in 50-60 points for tomorrow's trading session. Then there are high probabilities that we would break this low of 24,700 odd on Thursday and then fall down. So for tomorrow's trade, if below these levels of low 24,700 and high of 25,062 levels, if that doesn't get broken, then we are expected on a sideways range for tomorrow. Now let's see from the open interest perspective. So if you see on the higher side, there have been significant open interest positions that got built up. But despite we trading below 25,000 odd levels, still the put writing has not significantly dropped. There have been very small amount of unwinding that we had seen. And in fact, at the lower levels of around 24,800, we saw some additions on the put side. But we also see that there have been call additions even for 24,800 levels and 24,900 levels that got added. So overall for us, 24,800 primarily is going to be quite stiff. If we in tomorrow's trading session we start breaking 24,700 as we discussed, then the sell-off might continue and approach towards 24,500 levels for the expiry. Else if we are headed for crossing 25,000 levels on the expiry day. So for tomorrow's trading session, it is going to be crucial how the market is going to perform and where exactly it is going to close. So our closing will be a deciding factor for the expiry trade. So despite a sell-off today, we do not see much impact on the PCR. So we are still holding at 0.8 overall and 0.71, which is still, bullish. Now moving on to Sensex. So even Sensex saw a volatile session, but compared to Nifty, it was primarily because of the expiry. We had seen the volatile moves come in, and it was more kind of having an impact when compared to Nifty. So the expectation is that we should be crossing 82,500 levels only for the positive trades on the long side. Now that in today's trading session we saw a kind of um, gap down, and then this continued as a downfall, same as Nifty, and then recovered partially, and then further sell off came in and gradually we recovered. So still we are above 81,500 levels on a closing basis. So this is a positive approach because if you look at the overall long candle or trade that we have had 2 days before, so we have not significantly closed below the 50% of this particular candle. So in case if that happens, when we start trading below 81,300 odd levels, then that would act as a selling pressure on Sensex, and there are probabilities that we could approach even below 81,000 odd levels. So we are just like 700 points away to trade at 80,800 odd levels from where this significant up move started. So in case if we approach towards those levels, then we might turn on the weakness side for Sensex. Else if we trade in this range for tomorrow, then there are probabilities that on the monthly expiry we might see some bullish moves coming in. Now let's see from the perspective of open interest. So since we have moved to 3rd June expiry, we will not be talking about how the expiry was traded today. Rather, we will try to understand from the next weekly expiry what kind of moves are expected to come in on Sensex. Now, if you look only from the perspective of today's trade, so there is a kind of straddle kind of position that is built up. So in the first trade of expiry, first trade for the June expiry, so 81,500 is where we saw significant open interest built up. Now in the coming days we have to see that how this gets shaped up. So we also see some significant open interest additions for around 1.4 lakhs got added on 82,000 strike. So if you look from today's trade, we will definitely not be able to gauge anything. So it is better we will not further discuss. However, on the charts, slightly it seems to be weaker. Once we cross 81,500, either on the long side or on the short side, then we will see significant other strike the positions would emerge. So on the PCR front, it is zero point 0.9 overall, which is positive, and even at the money is 0.75, which is again significantly good. Now moving on to Bank Nifty. So Bank Nifty also faced selling pressure at the higher levels. So for us, the previous zone or 52-week high was around 56,000 odd levels. In fact, the expectation was that today's trade could help us bet or move towards those levels. But this was typically not foreseen at all, that we could see such significant downfall coming in. Compared to the major indices like Nifty and Sensex, there was only a kind of um, small move. In fact, the overall trading session was volatile with 800 kind of movements in Bank Nifty too. However, we saw only 0.39% loss in Bank Nifty, just 200 points or down from the previous close. So, which is not that significant when we compare to the broader indices, which were almost like 0.8% down. So it is just a half, of the major indices. Now, this shows a kind of indecisive candle. So previous day also it was indecisive, and today also it is indecisive. Meaning to say, on the long side, the traders were not willing to hold the positions. That is when the sell-off came in, and on the short side, there were lot of buyers who emerged and then pushed the Nifty index towards the higher levels. So now tomorrow's trading session is going to be crucial. If we trade in this overall range of 800 points, then we might continue the expiry in this range itself for the Bank Nifty monthly expiry. If we fall below this range, then that would emerge as a weakness on the short side. The probabilities are that the Bank Nifty would close, or if we close above this zone of around 55,800, then for sure we are expected to see the all-time high by this monthly expiry itself in Bank Nifty, and there are high probabilities that such kind of volatile moves are expected to again come in on the last day of the expiry, that is 29th May. So overall the approach has to be cautious on Bank Nifty. Now let's see from the perspective of open interest. So open interest seems to be a significant strong on Bank Nifty on the lower levels. So we saw at the higher levels, beyond 56,000 contracts alone, the open interest built up had happened. So we see slight open interest built up even at 55,500 odd levels. But with the kind of support that we are getting even at the higher levels from the put writers, there are high probabilities that we would trade in this range for this particular expiry. In case on the lower levels, it is difficult that we might close below 55,000 levels. However, there are high probabilities that we could approach towards 56,000 levels or even cross beyond 56,000 levels for the monthly expiry. So tomorrow's trading session is going to be crucial. If we sustain this 300 or 350 odd points and approach towards 55,500, then on the monthly expiry on 29th, high probabilities of crossing 56,000 levels. So this is our analysis or view. We have to see from tomorrow's perspective how the uh, close is expected to be. So we have already seen some pressure that got built up from the call writers uh, until 55,000 odd levels, but just one single trade can fail them. So tomorrow's trading session is going to be quite crucial for Bank Nifty. On the PCR front, overall it is 0.8, which is positive, and at the money is zero point 0.9, which is again bullish. On FINNIFTY also we saw similar such trade. There was possibility that we could cross this particular zone. However, uh, FINNIFTY was unable to, and then the selling pressure continued. Now we are expected to see a kind of range bound scenario even tomorrow. So if we trade in the range of 26,700 odd levels to 26,300 even in tomorrow's trading session, then on the expiry, if it is going to be volatile, then we might see crossing 26,700 odd levels, but doubtful to take up this 52-week high, because compared to Bank Nifty, Fin Nifty doesn't seem to be that bullish or strong. Overall, the probabilities are that we could either consolidate and trade in a range bound kind of scenario, or we might, if the bullish approach comes in, we might cross 26,700 and trade in the range of 26,800, but not cross the 52-week high. So let's see from the perspective of open interest what it suggests. So as we discussed, at the higher levels, we definitely see a lot of um, call writing happen, and then this call writing might push the Fin Nifty to approach 26,000 odd levels. But there have been, a strong significant support also that is helping the Fin Nifty to trade beyond 26,000 odd levels. So as long as the support emerges at 26,300 to 200 levels, then we might trade in this overall range of 1000 points. On the long side, surprisingly, beyond 26,700, 800, 900 odd levels, and even at 26,000, we see unwinding positions on the call side. So something, might be cooking around, we don't know, but tomorrow's trading session might make it quite evident and clear as to are we heading towards crossing 26,800 odd levels, which was the previous 52-week high. If that happens, then we are approaching 27,000 by the end of 29th May itself. Overall, on PCR front, it is 0.8, which is quite bullish, and at the money, it is 0.91. This is primarily because we have seen good open interest positions that got added on the call side and also on the put side. So now for us comes the significant discussion about the participation from the FIIs, proprietary traders, and retailers. So FIIs on the index futures have in fact taken short positions. They added some writing on the short side, and 67,000 contracts is what is being held on the index futures on the shorts from FIIs. On call options, they have significantly added the positions, and they are long by 3.82 lakh contracts, but they have also added put options to the tune of 4.48 lakh contracts. So net the FIAs have also been short to the tune of 65,000 odd contracts on index options. So on futures they are short, on index options also they are short. Now let's see if there are other market participants who have a different view. Are they holding longs, or the broader players are all short? Proprietary traders, they have not been holding any significant positions on the futures. However, on the options, they have cut their short positions and gone long. So yesterday, the proprietary traders, I think they were in fact holding long positions itself, uh, and it was client who was holding short positions. So today also we see that they have been continuing to hold the long positions to the tune of 79,000 odd contracts. So on call options they have been long, added some positions of 30,000 odd contract, and also on put options they have added significant 61,000 contracts and now holding 1.27 lakh contracts. So net proprietary traders are holding longs. So it is FIs who are short, proprietary traders are long. Now let's see what the client is doing. So client on index futures have gone long significantly to the tune of 65,000 odd contracts, which is exactly opposite to what FIs have been doing. And on index options on call options, they have significantly shorted 5.89 lakh contracts, and on put options they have covered it by shorting 6.21 lakh contracts. So net net it is just 31,000 odd long positions that are being held by client. So we saw today a huge downfall coming in, uh, but despite that we see significant positions have been taken in the cash markets by the DIIs. So DIIs have taken 10,105 crores of cash positions in the equities. On the FIIs, they have been modest, but still they are again longs with 348 crores adding in the cash market. So again in today's trading session, both FIIs as well as DIIs have significantly added their positions in the cash market. So overall, the market today surprisingly closed in negative. However, the overall sentiments, looking at least the data, seems to be quite positive, and this positivity might come in the monthly expiry of NSE indices. So again, be ready for the volatile market to be there on the weekly or monthly expiry. Now let's quickly discuss on the trending stocks for today. So first up is Supreme Industries. So this stock saw a notable rise of around 4% in today's trading session. So as you could see, it closed 164 points and there was a jump of 4.07%. Now the stock has been on an upward trend for almost like 4 trading sessions. And in fact, today is it marked a fifth consecutive gains by jumping 4% and closed at 4,200 odd levels. Now, if you see, technically, the stock had shown signs of breakout from this level. Now, if you see the chart, around May 21st is what it indicated with a sharp rise. And this broke out the previous, short trade. And that is how it became, quite strong. And this strength continued from last 4 to 5 trading sessions. In fact, if you look on the overall chart, from here it indicates as a kind of inverse head and shoulder pattern on the daily chart. Now, by the rise, it had cancelled that kind of inverse head and shoulder and crossed this particular zone of around 4,000 levels and given a breakout. Now, this might lead to a continuation on uptrend once we cross the resistance levels of 4,350 to 4,400 odd, from where we saw a kind of support that had emerged and then it moved up. But then from here, this support was broken and we significantly saw sell off coming in. And there was a support that it took somewhere, in the month of April. And from this zone, we have been on a uprise continuously. And from last 5 trading sessions, we have almost risen roughly around 20 odd percent from 3,500 odd levels to 420 levels. So now what is the expectation? In case if we cross the resistance of 4,400 odd levels, then we are headed for the uprise. But there are high possibilities that we could turn around from this zone, but after approaching this resistance. Now overall, if you see, we have been onto a broader pattern of head and shoulders. If you see, these are the shoulders, this acts as a head, and then again we are continuing in the head and shoulder kind of pattern. So the expectation is that we might trade in a range bound kind of scenario. Once we break out this zone, then we can see a significant up move coming in on the Supreme Industries. Now let's move on to the next stock, which was again in a trend today. So this is Ultratech Cement. This stock dropped approximately 2.29% and closed at 11,000 11,000 kind of levels, somewhere around 11,421 odd. So overall, there was a move of around 2.2%, 29% on a downward trajectory, and this severe sharp fall have led to approaching the previous support from where it started moving on the higher side. Now, if this on tomorrow's trading session continues to fall down, then we are expected on a downward trajectory. So if you look from the perspective of overall news, so today's decline could be majorly due to widespread kind of profit booking across the major blue chip stocks. So when broader market sentiment turns negative, even the fundamentally strong stocks like Ultratech Cement can witness selling pressure. And that in today's trading session, Ultratech Cement was listed among the top losers on Nifty 50. So overall, the cement sector performed well, with few other cement stocks rising and the other few which traded negatively. So there doesn't appear to be any major adverse kind of company specific news or announcement on Ultratech Cement today for this like 2% or 2.5% fall. However, our analysis uh, is that since there was a news from the Met Department signaling that we have been seeing like 2 weeks of early arrival of monsoon rains. Now, this typically suggests that the construction activity slows down during this monsoon season, which could temporarily dampen the cement demand. Now, this anticipation might have led to this kind of selling pressure, what we have been seeing from last like 2 3 trading sessions. In fact, today's session suggests that the sell-off might continue from here on, and we could break the 11,200 odd levels and continue trading below this zone. So overall, there is a selling pressure that is seen, and we have been trading in this narrow range for almost like 2 to 3 months odd. Now in tomorrow's trading session, if we break this narrow range, we will start trading in this bottom range of 10,000 odd levels to 11,200 odd levels. If we continue in this channel, then there are high possibilities that the stock has become weakened, despite the bullish momentum that we are seeing in the broader markets or the overall markets. So that's it from the perspective of our analysis. So if you found this today's analysis insightful, please give the video a thumbs up and share it for the maximum reach. And ensure to subscribe to our channel and hit the bell icon for our daily episodes of pre-market report. So thanks for watching, and we will see you in the next video.